Welcome to LexTalks Legal Topics, Simplified, the podcast that simplifies the world of law for Indian students like you.
Sounds good.
Today, we're diving deep into India's banking sector, social control, and reform.
Ooh, that's a big one.
It is a big one. It's a topic that's super important to India's economic and social development.
Right.
I mean, it's fascinating, right?
It is. It's a journey how India reshaped its banking system to try to meet these social and developmental goals.
Yeah, it's bold moves, big challenges, and it's still evolving even today.
It is.
Okay, so let's set the stage.
Right.
Imagine India in the 1960s and 70s.
Back in the day.
What was the banking scene like back then?
So pre-1969, the banking sector was mostly private.
Mm.
And it wasn't really working for everyone. It was kind of like a club,
Right.
for big businesses and the urban elite.
Ah, so the average person, especially in rural areas,
Mhm.
they didn't really have access.
Not really, no.
Not much access.
Yeah, back then, a single bank branch had to serve over 136,000 people.
Whoa, that's a lot of people.
Huge area.
Yeah, no wonder people were pushing for change.
Absolutely. And it wasn't just about access either.
Oh.
The system itself was really fragile. Like between 1947 and 58, there were 361 bank failures.
Whoa.
Yeah.
That's a lot.
That's a recipe for disaster.
Yeah, not very stable.
So what did the government do?
Well, they started by trying to kind of nudge things in the right direction
Okay.
with the social control policy in 1967.
Hmm.
So the idea was to try to break the hold that big business had on the banks
Okay.
and to channel credit to sectors that had been ignored,
Hmm.
like agriculture and small businesses.
So making it fairer, more inclusive.
Exactly.
Okay.
Yeah, so the RBI, the Reserve Bank of India, they got more power to regulate.
Hmm.
There were new rules about who could be on bank boards.
Hmm.
It was all aimed at diversifying who was in control.
Okay. And what about loans? Did anything change there?
Oh, yeah, for sure.
Okay.
They introduced guidelines to make sure loans weren't just going to the same small group of people.
So there were restrictions on lending to bank directors, for instance. The goal was to try to level the playing field and make sure credit flowed to those who needed it most.
Okay, so it sounds like a step in the right direction,
Yeah.
but was it enough?
Not really, no.
Wow.
The government realized they needed a more radical approach,
Hmm.
which led to bank nationalization.
Okay, now nationalization, that's a big word.
It is a big word.
What does that actually mean in this context?
So it essentially means the government took ownership of the major private banks.
Yeah.
The first wave of this was in '69 when 14 banks were nationalized.
Mm-hmm.
And then there was another wave in 1980 with 6 more.
Okay, so that's a bold move.
It was a bold move.
What was the thinking behind nationalization?
So the driving force behind this was Prime Minister Indira Gandhi,
Yeah.
who believed that banks should be like engines for social welfare and economic development.
Mm-hmm.
She thought nationalization was a way to achieve these goals by, channeling credit towards priority sectors,
Oh,
expanding banking services to the masses.
sounds like a turning point
What?
for the sector.
It was.
How were the outcomes?
Well, one of the biggest impacts was the expansion of banking services, especially in rural areas.
Mm-hmm.
Like the number of bank branches just skyrocketed, bringing
Wow.
banking to the doorsteps of millions of people who had never had access before.
So people who had previously relied on these informal and often exploitative sources of credit, now they had access to formal banking.
Yes, that's right.
Oh, okay.
And the data actually shows that rural deposits went from 3% of total deposits in '69
Okay.
to 16% by 1990.
Whoa, a five-fold increase.
It's huge.
Yeah.
Shows how nationalization really broadened financial inclusion.
Wow. Okay, so it wasn't just about access, then it was about how the credit was distributed.
Yeah, that's where priority sector lending comes in.
Yep.
Nationalized banks were told they had to allocate a percentage of their lending to specific sectors that were seen as crucial for national development. This included things like agriculture, small-scale industries, and other sectors that really had been starved of credit before.
So they were basically making sure that banks weren't just chasing profits.
Yeah, exactly.
They were serving broader social and economic goals
Yes.
of the nation.
Yes.
Okay. And to ensure that those rural deposits were actually being used for rural development, they implemented a credit deposit ratio of 60% in rural and semi-urban branches.
Right.
Well, then what is a credit deposit ratio?
So it's a measure of how much of the deposits a bank receives are actually lent out in that same area.
Okay.
So in this case, a 60% ratio meant that at least 60% of the money deposited in rural branches had to be lent out in those same rural areas.
Okay.
So it stopped the funds from just being siphoned off to the urban centers.
So keeping the money where it was most needed.
Yeah,
Okay, it sounds like nationalization really achieved some remarkable things.
it did.
But I'm guessing it wasn't a perfect solution.
No, it wasn't. There were challenges.
Okay, and we'll delve into those challenges in the next part of our deep dive, so stay tuned to find out what worked, what didn't, and how the banking sector continued to evolve in response to these challenges.
Looking forward to it. Welcome back.
We've been talking about the evolution of India's banking sector,
We have.
and it's been a pretty wild ride.
It has.
From private control to those huge changes with nationalization.
Yeah,
It's clear that the government played a big role
a huge role.
in shaping the banking landscape in India.
Absolutely.
But as with any major policy shift like this,
Right.
there are always critics
Of course.
and unintended consequences.
Yeah. So what were some of the downsides of nationalization?
Well, one common criticism was that nationalized banks, they got bogged down in bureaucracy,
Oh, yeah.
leading to slower processes
Mm-hmm.
and a lack of responsiveness to customers.
Right. It was hard to get things done.
Yeah, so access to services improved,
Yeah.
but the quality of service wasn't always great.
Not always, no. And another concern was that nationalized banks, even with their social goals,
Right.
they still struggled to reach every single household. So there were still segments of the population,
Especially in remote areas.
especially in remote areas, that remained financially excluded.
So nationalization wasn't like a cure-all solution.
He wasn't a silver bullet, no.
Were there any other challenges that came up during this time?
Well, one issue that started to become a problem was NPA's non-performing assets.
Okay, I've heard that term before,
Yeah.
but I'm not really sure what it means.
So imagine you're a bank and you lend money to someone,
Okay.
and that person stops repaying their loan.
Hmm.
That loan becomes a non-performing asset for the bank.
So it's like a bad loan.
Yeah, basically a bad loan that's not making the bank any money.
Right, okay.
And if a bank has too many NTAs,
Yeah.
that can really hurt its financial health.
That makes sense. So how did nationalization contribute to this problem?
Well, some people argued that nationalized banks were under a lot of pressure to lend to priority sectors.
Right.
Even if those sectors weren't always, financially sound. So they were lending to people who maybe weren't going to be able to repay.
Right.
And that led to more NPAs.
So good intentions,
Yeah.
but not always good outcomes.
Sometimes, yeah. And this whole issue of NPAs, it's
Yeah.
stuck around for years to come.
Okay, so we've got this system where nationalization expanded access.
Right.
But there were issues with efficiency,
Yeah.
quality of service, and rising NPAs.
Right.
So what happened next?
Well, in the 1990s, there was this new wave of economic thinking, liberalization, they called it.
Okay.
It was sweeping the globe.
Hmm.
And India decided to open up its economy,
Okay.
which had a huge impact on banking.
Okay, liberalization, another big word.
It is.
What did this mean for the banks in India?
So essentially, it meant that private and foreign banks could enter the Indian market.
Oh, wow.
This broke the monopoly that the public sector banks had had for decades.
So it was a big shakeup.
It was a huge shakeup. Yeah, competition was suddenly injected into the system,
Wow.
and banks had to actually work to attract customers.
Right.
It led to this boom in retail banking
Okay.
with all kinds of new products and services.
Sounds good for the customer.
It was in a lot of ways, yeah.
More choice, more competition usually leads to better products and services.
Right. It led to a wave of innovation in the banking sector. They started focusing on technology modernizing operations, trying to meet the needs of their customers.
So things like ATMs and credit cards and online banking.
Exactly. All the things we take for granted today.
Yeah. So liberalization brought these positive changes.
It did.
But I'm guessing there were also some downsides.
Well, one concern was that private and foreign banks
Yeah.
who are focused on profits
Right.
might neglect rural areas where the returns are lower.
Right.
People were afraid that this would reverse some of the gains in financial inclusion.
So it was a trade-off between efficiency
Yeah.
and social equity.
You could say that. And there were also issues with some aggressive loan recovery practices.
Oh, so some banks were using harsh measures to recover their money.
Yeah, unfortunately some did, which highlighted the need for stronger consumer protections.
Yeah. Okay, so it seems like with every step forward,
Yeah,
there are new challenges.
that's the nature of progress, isn't it?
Right.
But the story doesn't end there.
Okay.
The Indian banking sector continued to evolve.
Hmm.
In the 2000s and 2010s, there was this new wave of consolidation.
Or shakeups.
Yeah, basically.
Fuck.
We started to see all these mergers, mainly involving public sector banks.
Okay.
And the goal was to create these larger and stronger institutions
Okay.
that could compete better on a global scale.
So creating these banking giants
Exactly.
that could hold their own internationally.
Yeah. One of the biggest examples of this was the merger of the State Bank of India, the SBI,
Okay.
with its associate banks in 2017.
Yeah.
This created this massive banking entity, one of the top 50 banks in the world.
Wow, that's huge.
It was huge.
But I'm guessing people were concerned about job losses and reduced competition.
There are definitely those concerns, yeah. But the government argued that consolidation was necessary to improve efficiency, reduce costs, and ultimately strengthen the sector.
So making Indian banks more competitive
Exactly.
in the globalized economy.
Yeah.
But what about those smaller players? Especially the ones that focus on rural areas.
You're talking about the regional rural banks, the RRBs.
Yeah.
They continued to play a vital role
Okay.
in bringing financial services to rural communities. And the government took steps to strengthen them.
So trying to balance the needs of the rural areas
Exactly.
with these big global banks.
Yeah.
Okay. And alongside consolidation, we also saw this push for financial inclusion,
Right.
especially with the launch of the Pradhan Mantri Jan Yojana in 2014.
Yeah.
This was a massive initiative
It was huge.
to try to reach every household in India
Right.
with bank.
Yeah, it was really remarkable. On the very first day, they opened 15 million bank accounts.
Wow, 15 million in a single day.
I know, it's incredible.
That shows the power of a well-executed program.
It does.
Right.
By 2017, over 307 million bank accounts had been opened under this scheme. And 231 million RuPay debit cards had been issued.
Okay, so bringing millions of people into the system.
Yeah, into the formal banking system.
Okay, but while we're celebrating these achievements,
Right.
we can't forget about those NPAs.
Oh, yeah.
Did they go away?
They didn't go away. No, they continued to be a problem.
Okay, so what did they do to tackle this?
Well, one thing they did was strengthen the legal framework for debt recovery.
Okay.
The Insolvency and Bankruptcy Code of 2016 was a big deal. It introduced a time-bound process for resolving insolvency cases.
So making it easier for banks to recover their money.
Exactly. And apart from that,
Yeah.
there was also a push for banks to be more careful about who they lent to.
Right, so preventing the bad loans from happening
basically.
in the first place.
Exactly.
Okay, so two-pronged approach.
Yeah.
But even with these measures,
Right.
NPAs were still a problem.
Yeah, they were, especially with the global economic slowdown in the pandemic.
Yeah, that makes sense. It sounds like a constant struggle.
It is a constant battle for the banking sector.
But even amidst these challenges,
Yeah.
I'm guessing there are some new opportunities
Oh, there are.
coming up.
Yeah.
What are they?
So we're seeing this huge technological revolution
Okay.
in finance, the rise of fintech.
Fintech. Okay, that's a word I hear all the time now.
It is.
What does it actually involve?
So it's all about using technology
Okay.
to make financial services more accessible, more affordable, and more efficient.
Okay.
We're talking about things like mobile wallets,
Right.
online lending platforms, neobanks, blockchain, AI, all these innovations that are changing how we deal with money.
Yeah, sounds like a whole new world of financial possibilities.
It is.
But what does this mean for the traditional banks? Are they
Yeah.
going to disappear?
That's the big question.
Right.
Some people think fintech startups will eventually replace traditional banks.
So banks as we know them will be gone,
It's possible, yeah.
like the dinosaurs.
But others think that traditional banks still have a really important role to play.
Oh.
They have those deep customer relationships,
Right.
years of experience, and a strong regulatory framework behind them.
So it's not game over yet.
Not at all, but they do need to adapt,
Okay.
embrace technology, become more agile, and focus on giving customers a really good personalized experience.
So evolving with the times.
Yeah, integrating these fintech innovations
Yeah.
into their operations.
Okay, so it's about banks becoming more like fintech companies
Oh, no way.
themselves.
Yeah, offering these digital solutions
Right.
to meet the expectations of their customers.
That sounds like a really exciting time
It
to
is.
be in banking.
It's so dynamic. Lots of challenges, lots of opportunities.
Yeah, and speaking of opportunities,
Yeah.
let's shift gears a bit and talk about the legal and regulatory frameworks that govern all of this.
Sounds good.
So stay tuned, we'll be right back.
Looking forward to it.
Welcome back to LexTalks. We've been on quite a journey through India's banking
I
history,
have.
from those pre-nationalization struggles to the rise of fintech.
That's right.
And now we're going to put on our legal lenses
Okay.
and examine the rules of this dynamic sector.
That's good.
Perfect timing, because I need some clarity here.
All right.
My head is spinning a little bit with all these changes.
It's a lot.
Where do we even begin?
Well, the cornerstone of banking law in India
Okay.
is the Banking Regulation Act of 1949.
Okay. The Banking Regulation Act.
You can think of it as the rule book for banks. It covers pretty much everything.
Like what?
Licensing operations, those mergers we talked about, all of that.
So it gives the RDI a lot of power.
It does. The RBI is like the watchdog, making sure everything runs smoothly.
Okay. But that can't be the only law, right?
Oh no, banking's way too complex for one act. There's the Reserve Bank of India Act of 1934,
Yep.
which sets up the RBI and outlines its powers.
Okay. Yeah.
And then there are laws for specific things.
Like what kind of things?
Negotiable instruments, foreign exchange, deposit insurance, you name it.
Wow. It's a whole legal web.
It's a lot to keep track of.
Yeah, it is. But with all these regulations,
Right.
are they actually protecting consumers?
That's a great question. And in recent years, there's been a big focus on making sure consumers are treated fairly.
Okay.
The Banking Codes and Standards Board of India, the BCSBI, they play a key role here.
BCSBI. Okay. And another acronym. What do they do?
They set these standards for banks to follow
Okay.
to encourage good practices like transparency and fairness.
So it's more about encouraging good behavior than strict rules.
Yeah, you could say that, but there are rules too.
Okay.
Like the RBI has guidelines for things like grievance redressal mechanisms.
Okay.
So customers have a way to complain if something goes wrong.
Right. So there's recourse for them.
Exactly. And I'm sure you're wondering about those aggressive loan recovery tactics.
Yeah, I was just going to say.
There are guidelines for fairness in lending and debt recovery
Okay.
to protect borrowers.
Okay. So rules and guidelines. But what happens if someone breaks the rules? Who enforces all this?
The RBI is the main enforcer.
Okay.
They can do things like impose penalties, fines, even revoke a bank's license.
Whoa. Okay. So they have some serious power.
They do.
But what about us?
Yeah,
The everyday consumer? Can we take any legal action if we feel like we've been wronged?
you absolutely can.
Okay, good.
There are options like consumer courts, banking ombudsman, even civil courts.
Okay. So it's important for people to know their rights
It is.
and what they can do.
Absolutely.
Okay, but with all this fintech stuff going on,
Right.
are these existing laws enough?
That's the big question. Policymakers are really grappling with that right now.
Yeah.
Fintech is blurring the lines between finance and technology.
Yeah.
It's posing all sorts of new challenges.
Yeah. I bet things like data privacy and cryptocurrencies and these online lending platforms,
It's hard to fit those into the old boxes.
yeah, they don't really fit.
They don't, and the government knows that they're working on updating laws to address these challenges. Data protection is a big focus
Makes sense.
because these fintech companies handle so much information.
So much data.
And figuring out how to regulate new things like peer-to-peer lending
Yeah.
and cryptocurrencies.
Yeah, that's a big one.
That's a big one.
So it sounds like the legal landscape is just as dynamic as the sector itself.
It is constantly evolving.
Well, we've covered a lot of ground today,
We have
from ancient practices
all the way to the future.
to the latest in fintech. I hope you, our listeners, now have a better understanding of how India's banking sector has evolved
I hope so.
and the forces shaping its future.
Yeah, it's a fascinating story.
It really is. We've explored nationalization, liberalization, the challenges of MPAs, the rise of financial inclusion, and the potential of fintech.
Right. It's a story that's still being written.
Exactly. And we encourage you to continue exploring.
Definitely.
Read up on the latest developments, stay curious, and keep those legal minds sharp.
Absolutely.
And of course, don't forget to subscribe to LexTalks
For more deep dives.
into the fascinating world of law.
Yes.
Thanks for tuning in to LexTalks.
It's been fun.
We'll catch you in our next episode.